Hey, Pat.
Hey Justin, how are you?
Doing well. How are you?
Pretty good. Okay, so
I
are
will.
we?
Yeah, I think they want me to pull it up here, so let me just present it.
Okay, well, thanks everyone for joining. I'm Pat Larson, CEO of ZenLedger, and joining us is Justin Macari, who is the leader at MacTax, an accountant. Justin, do you want to give yourself a quick introduction?
Yeah, sure. So, Justin Macari over here at MacTax, been helping people in the NFT crypto community with their NFT taxes. Started with VFriends, the VFriend behind me, and have kind of evolved and helped people through word of mouth, try and put out a lot of content on tax education. So happy to be here and hoping we can provide some value to everybody listening.
Yeah, we'll be doing like a quick crypto 101. Feel free to ask questions as we go, and we'll either answer them as they pop up or um, kind of in the name. So let's, um, Justin, if you want to share your screen, you can drive the presentation if you like.
Sounds good.
And since you are the tax expert, I'll let you do most of the talking.
Sounds good here. So little seems like I only have access here to the slides. So if we get any questions, I can't seem to see on the video
Yeah,
anymore. So let me
I'll
know
field
and
those.
perfect. So disclaimer, ZenLedger is not a tax accountant or professional. ZenLedger is the tax software. Pat, a little bit about you if you want to elaborate.
Yeah, just some uncommon things. I was a helicopter pilot, and then got my MBA, and have worked in finance and tech. Started ZenLedger about 5 years ago. We were venture backed with 35 people, and have worked with the IRS and Big Four accounting firms, just like ones that Justin used to work at, and helped over 100,000 people.
Awesome. And then I told you guys a little bit about me. I was at PwC prior to starting MacTax, and started going off on my own. And NFT crypto taxes was a big area of opportunity, and been helping business clients and personal clients handle their NFT and crypto taxes.
And just as another quick disclaimer, both Justin and I are pretty available, so you can go to Justin's website. Justin, you want to? It's is it MacTax?
Yep,
CPA.
MacTaxCPA.com.
Yep. And then you can get a hold of us at ZenLedger anytime you need to by email at hello@zenledger.io, or in the chat on the website or inside the app. You just go to the bottom right and click on the chat icon and start a conversation.
Awesome. And you guys are very responsive. I can attest to that.
So
All right.
here's a quick agenda, and we can just kind of like work through it as we go. And Justin's definitely an expert in all these areas.
Yeah, so Crypto 101, IRS 1040 and tax letters, tax strategy, and FAQ, and hopefully get into some Q&A, which I think will hopefully be the most valuable for everyone in here. So Crypto 101, IRS treats crypto as property. What constitutes a taxable event? Well, pretty much everything with the exception of buying crypto with US dollars. So selling crypto for USD, trading one crypto for another crypto, a big misconception area that is a taxable event. Using crypto to purchase a good or service. So if you're using it as a business expense, that's a taxable event. You have to figure your gain or loss on crypto, whether you convert it or you're buying a good or service. You have to figure your gain or loss as if you received US dollars. You'll hear that as like a recurring theme throughout this presentation. Buying or selling NFTs, another big misconception. When NFTs first came out, everyone's like, oh, I bought an NFT, I don't have any taxable event. Well, if you bought that NFT with crypto, you did have a taxable event. Donating crypto, gifting crypto, and transferring from one wallet to another, self-transfers, are all non-taxable events. But you may have a crypto gift deduction on your return for any donations, for any charitable contributions, and gifting is a separate return rather than income tax. Pat, feel free to add in, stop me, however, here. Cost basis, typical, most conservative is first in, first out. Specific ID, last in, first out, and highest in, first out. This is something where ZenLedger is probably most pivotal to. And what ZenLedger does is aggregates all of your exchanges and wallets into one place. So you can, whether you have mining, airdrops, forks, buying and selling NFTs, you can combine all your multiple wallets and all your cost basis in one place to maximize your capital gains and losses by aggregating that cost basis. And a highest in, first out approach with the ZenLedger software allows taxpayers to save much more money than if they try and calculate it themselves. And it also provides a much more accurate calculation because ZenLedger links up with the exchange and with the blockchain to get the exact US dollar amount at the time of transaction. So this is pivotal in doing our jobs as a CPA.
And that's another thing is choosing the accounting method. If you're working with a tax professional, usually it's a conversation the two of you will have and make a decision because you want to keep it consistent over years, right?
Right. Now, there is no reporting of the method, but it is best practice to keep it the same method year over year. And I'm sure we're going to be seeing more guidance in declaring that method so the IRS is aware what your method is and reporting that method so you don't switch. But yes, you do want to stick to it. Generally, highest in, first out leads to the best result in most cases, whereas first in, first out can produce more favorable results down the road in general. So mining, there's some specific areas with mining where, and we'll talk about this more in detail, I'm sure too, where if you have a business where you're getting paid in crypto, whether it's mining or some other business, you have to recognize ordinary income at the time you receive that digital asset at its fair market value on the date of receipt. And then where we saw in 2022, we had a huge drop in a lot of crypto assets. When you then go to sell it, you have to calculate your gain or loss in addition to the ordinary income that you received it at that time. Again, doesn't matter if you didn't sell the digital asset when you received it, it's ordinary income at the time of receipt based on the fair market value.
And just as a quick one other thing is HIFO is highest in, first out, and that's kind of a way to optimize the capital gains each year. But it's not generally recognized as like the conservative method. First in, first out would be the most conservative method. It's like the method that the IRS has said they prefer to use.
Right. So answering the 1040 question, we talked about this a little bit before. You have to answer yes if you basically received crypto as payment, sold crypto for cash, traded crypto to crypto, traded NFTs, used crypto to purchase goods or services. If you only held crypto or you only purchased crypto with US dollars and never traded it, then you can get away with not answering yes to the question according to how the question is written for 2022. Again, keep in mind what we're discussing today is all what we are taking from, the IRS's limited guidance that has been presented. And I'm sure we will see further rules and regulations and requirements coming out. So this is an ever-changing kind of gray area in the tax code. With that being said, the IRS is starting to crack down a little bit. We've seen these letters go out. And really what these letters do are one of two things. They say either, we know you have crypto, consider changing your return to report your crypto, or we know you have crypto or digital assets, and here is your tax bill, or take this action now. So one is a little bit more or less aggressive than the other in terms of these letters that the IRS is sending out to people. And this is based on third-party information that the IRS is receiving that you may have a crypto account or own or had taxable crypto activity for the year. So tax strategies, we talked about this a little bit, your accounting method, limit your transactions, tax loss harvesting, and self-directed Roth IRA. So tax loss harvesting, probably one of the biggest areas of opportunity toward the end of 2022 with the big drop in market. There is no wash sale rule under the current IRS guidance, which means you could sell your digital asset and repurchase it right away. You don't have to wait for that 60-day window like you would with stocks to realize the tax loss.
Do you think there's a little bit of gray area there? Like if you wait, 1 second versus 1 hour versus, 1 day or 1 week?
So the way it's written is there is no, discretion in terms of 1 second versus 1 day versus 15 days. I'm sure this is an area as more guidance comes out. This seems like a little bit of a loophole that will get closed, but at the same time, with how complex it is and the burden on taxpayers to report crypto, it almost seems like it's a little bit of a give back, if you will, that, okay, we understand you're going through a lot of complicated reporting here. Why are we going to add in the wash sale on top of it? I can see it going away for sure. But it's one of those things until we get clearer guidance. It's an opportunity for taxpayers, in our opinion, at least. So frequently asked questions.
These are just how you use the software, which we can provide you with links to videos we've done that walk you through this. I'd rather just use this time, Justin, for you to answer questions or give some more of your thoughts or advice here.
Yeah, absolutely. And there's a good video of me and Scott going through this with the tax software, with the ins and outs of how to do certain things and use the software to get all of your crypto uploaded. But I agree. Let's stick to tax guidance and tax questions here.
Maybe we could go to the previous slides again. There were a couple other topics that we could talk about in tax strategies. Maybe we can go through those.
Sure. So there's a couple of things here, and so the self-directed Roth IRA is being able to invest in crypto in a retirement account. That's always, a favorable strategy. You may need a custodial for those accounts, which can be expensive, but that is a strategy. If you're a little bit more of a high roller, if you will, in crypto, and you're saving for retirement, that's an area of opportunity. So limit your transactions. It kind of also depends on your situation for the year, because all gas fees can be deductible as write-offs as well. So in a year when you're incurring high gas fees, it can also help your tax advantage too. So limit your transactions can be helpful in lowering your time to categorize and organize all of your transactions, or even, paying fees to do so. And accounting methods we discussed before in terms of first in, first out, last in, first out, highest in, first out. ZenLedger does a great job of allowing you to see all the options and recalculate it seamlessly in the year that you're working on to see that benefit. And accounting method is also extremely important when it comes to your business transactions, whether you're on the cash or accrual method. Generally, the IRS prefers the accrual method, which is recognizing taxable events when they actually occurred, not just when the cash hit your bank account or not. So there's a little bit of interplay between how you're figuring your crypto in ZenLedger and how it's translating onto your business return, whether it's a Schedule C or 1120S or a partnership return.
Yeah. I think the one distinction with limit your transactions is simply, if you take it to the extreme, if you have no taxable events in a year, if you do nothing in crypto, or if you only buy like as dollar cost averaging, you're going to have a very simple return, and you're not going to actually have any capital gains to worry about.
Right, exactly. So we talked about frequently asked questions, common hangups. Like we said, we do have another video on all of the in and outs of how to use the software. I'd highly recommend checking that out. Pat, do we have any Q&A in the comment section?
We've had a couple, but we've actually answered them as we've talked. So I think maybe if you want to talk a little bit more about common questions or things that you get for NFT creators or people who've been in DeFi, some of the more nuanced
Yeah.
area.
Yeah, I agree. That's kind of where I wanted to go, and I had printed out the whole IRS FAQ, which is a great area for you guys to go online. Is check out the IRS frequently asked questions section. I understand paying for consulting and support can be costly, so take what you can here, and we're going to give you the tools to do the research yourself. If you have a limited number of transactions, if you feel like you can handle this yourself, these videos is exactly that. Crypto Tax Awareness Week. We're going to help everyone get aware of what they need to do. So go to the IRS and go to the frequently asked questions on virtual currency. Now, the leading guidance for all of these FAQs comes from Notice 2014-21. Now, 2014 is the year that the notice came out. So we are very behind here in terms of new regulation and new guidance, where the authoritative source is a notice from 2014. So like we were discussing before, I'm sure they will be coming out with new guidance and new updates, probably closing the wash sale rule eventually as well. One of the biggest areas is DeFi, and we talked about it briefly, is earning crypto. When you earn DeFi, which like staking rewards, let's say, or you get paid in crypto, whether it's for a personal service or it's through your business, you have to recognize the income at the fair market value at the time of receipt as ordinary income. And depending on your trade or business, unless your business is in the business of NFT and crypto, you're going to be limited to capital losses when you then go to sell it, assuming it depreciates, or it will be capital gain if the crypto appreciates compared to when you received it, whether it's staking or payment in terms of crypto. So you have this mix between ordinary income and capital income, capital income gains and losses that people need to differentiate for the average taxpayer, that you can't just simply offset these two. You have to consider this as you're going through your year in terms of, okay, what is my tax burden going to look like? Be a little bit proactive. ZenLedger is a great tool and resource that you can track this throughout the year, same as you would in your QuickBooks account for your business. You reconcile to your bank statement, you look at your profit and loss, your balance sheet, keep your crypto up to date, re-import your Coinbase history, relink your MetaMask wallet into ZenLedger so that you can see year to date where you're at, how much ordinary income you owe, and where is the market going? Should I sell and claim some losses? Should I be selling right away and repurchasing? This way I at least can set aside some cash to pay my tax bill on the ordinary income piece. That's probably one of the biggest areas that I see in my practice where we are explaining this to clients. And sometimes, unfortunately, we're explaining it to them after the fact, after the year has closed. So that's where tax planning can be a lot more advantageous than just doing the tax return at the year end.
Yep. I think in the next couple of years, what will be interesting is with like college athletes and name, image, likeness for college and pros as well, because a lot of those earnings will probably be in crypto or selling NFTs. And so you'll have a lot of high visibility people in crypto, not just Tom Brady, but a lot of college athletes.
Right. Yeah, it's so true. And the royalties that you earn on those NFTs is all ordinary income as well. But there's plenty of business opportunity and traditional tax deductions that once you're getting paid in crypto and it is a business, that can be mixed with these crypto rules. They're not exclusive. It just gets incorporated into your business return. So ordinary business deductions and necessary business deductions that are ordinary and reasonable can be applied to your crypto income as well. So that's something to keep in mind. It's a good area of opportunity in terms of, ability to take advantage of the tax code. Of course, by all the legal deductions and credits that are allowed. Another area that kind of I see is as an area where there's peer-to-peer transactions, right? So let's say you and your friend want to trade NFTs. And then you're at the end of the year and you're doing your tax calculation in your software, and you're using ZenLedger, and you want to know what cost basis to put in. So the IRS actually answers this in question 27. It says, I received crypto in a peer-to-peer transaction or some other type of transaction that did not involve a cryptocurrency exchange. How do I determine the cryptocurrency's fair market value at time of the receipt? So the way the IRS goes into explaining this is the cryptocurrency exchange at the fair market value of the cryptocurrency is determined as of the date and time the transaction was recorded on the distributed ledger or would have been recorded on ledger if it had been on chain. So if you received an NFT and paid somebody consideration in real life, the IRS is saying you can account for that in your cost basis. And what you got rid of, you have to determine at the fair market value at that time. So you have a gain or loss on what you gave to your friend, and you have to recognize your new cost basis based on what you provided to the client, to your peer at that time, whether it's on chain or off chain. Include that in your calculation. That's one of the more complex situations, but we see it more often than not where people are trying to maybe not pay the gas fees or OpenSea fees. They'll do peer-to-peer transactions.
Mm-hmm. Okay. Let's see here. I think another question I get all the time is about stablecoins. They're not recognized by the IRS as being a dollar. They're just another token. So stablecoin to stablecoin trades, crypto to stablecoin to crypto, those are all taxable events. The IRS just considers them all crypto to crypto trades.
Right. Yep, exactly. And you will have some small gain or losses on your stablecoins as well. Donating crypto, another area. Donating crypto that is over $5,000 can require Form 8283 to be filed. You'll see that listed also in the IRS, question 36. So if you're donating over $5,000, you also need that appraised by somebody because it's considered property. So that can add additional complexity as well if you're donating crypto. So maybe consider doing it in smaller increments throughout the year to not such a one big lump sum to have lower compliance costs and burden there. I see we got a question. How far back in years can ZenLedger cover 2022 taxes? ZenLedger goes back all the way, I've seen, to 2017 and probably further. ZenLedger can go back, as far as...
Yeah, we've had 2013 people use ZenLedger as well. So it just, again, it goes back to your accounting method, whether that's relevant or not. But if you've been trading for 5 years and you're having taxable events today, the prices you acquired stuff in year 1, 2, 3, 4, 5 are going to kind of cascade and carry over through to your current capital gains and losses today because of long-term and short-term capital gains.
Right. What is another area that you see as a frequently asked question?
I mean, we've covered most of them. I think for the most part, a lot of our customers are pretty informed because so there's still a pretty low compliance rate, I think. But we can all see the writing on the wall with the yes or no digital assets question on page 1 above the fold of the 1040. And there's going to be just more compliance and regulation in crypto. So the purported 20 million Coinbase customers eventually are all going to have to check yes in that box, right?
Yeah, I try and tell because there's still a few people that I go to a lot of events and I talk to a lot of people, and you get some people still saying, oh, they're never going to find me, I'm not going to do it. I'm like, that's fine. I mean, you're not doing it for me, but I can tell you they're not asking that as the very first question for no reason. In my AI CPA continuing education course, there was an IRS agent giving one of the presentations, and they said the number one area that they're going to crack down with all of this new money that they received is cryptocurrency. So it's an area where you want to just get ahead of it, do the proper reporting, tell the IRS what you did rather than them mailing you a letter telling you what you did and then having to prove otherwise.
Yeah. And, it all comes down to the IRS. Like if you live beyond what your means look like from your income tax report, eventually an IRS agent shows up at your door. And if you do the same thing with cryptocurrency, the chickens come home to roost, because right now you can't eat Ethereum or Bitcoin. You generally have to turn it into dollars. Your bank sees that at some point.
Exactly. I'm like, that's what I try and tell people. It's going to have to come out eventually. And there is a tie because you sent it from your bank to Coinbase. It's all public ledger. They can see where it went wallet to wallet. They've tracked down way more complex stuff, and this is all public. So
yeah,
I
you
agree
can try
with
to
you.
move to Portugal or Venezuela, but not too many people are doing that.
Right. Yeah, that's an extreme case. Most people are not doing that. ZenLedger's got a lot of great resources in addition to our videos. There's the ZenLedger blog that people can go to reference. There's a lot of good content. I know that, I've been seeing that you guys put out, working with you guys on. It's very, very helpful for everybody out there, for tax professionals and taxpayers. One other thing that I wanted to mention, if there are any CPAs listening to this, is if you are an accountant listening to this and if you're not invested in crypto, you don't know about crypto, but you're thinking about helping a client with their crypto taxes, I would say something that's helped me tremendously as bridging the gap between the crypto world and the accounting world is actually being a user and investor in NFTs, digital assets, staking, trying it out myself. You don't need to. You can buy 0.01 Ethereum just to get the feel for how things work. So when you're seeing a client's transactions, you can easily understand what's going on because it's all right there on the blockchain. And you can properly guide and answer clients' questions where, oh, I bought this NFT for a travel or an educational expense. Well, you have to sell it to realize that loss. It's not a traditional business expense, it's property. And being in the community, being in the world of crypto will help you better serve your clients if you're actually using it yourself, even if it's just with $5 of plain money just to get the experience.
Yeah, and we'll have a live webinar tomorrow, 8 a.m. Pacific, 11 a.m. Eastern, specifically geared towards tax professionals. But I agree with you, as more and more kind of younger people kind of age into when they start using accountants and wealth managers, you're going to want to ask your accountant or wealth manager, like, hey, do you participate in crypto? Because it's 25% of my net worth, right? And it really matters that you know what I'm talking about here.
Right.
And then, so if you guys have other questions, please feel free to use our tax guides on our website, ZenLedger.io, or go to the blog. And then also you can just ask questions of our support staff. That'll help you kind of walk through things. But we've produced a good amount of videos, blogs, and tax guides to kind of walk you through the whole thing.
Yep. We got all those resources on ZenLedger. I've got a Discord and I got plenty of social media content. You can ask your question, check out the social media content. We got a lot more coming out with ZenLedger that I'm looking forward to. A lot of combined content this week. So hopefully this was helpful to people, Pat. This was a pleasure doing this with you.
Yeah, it's fun to chat with you, Justin. Everyone have a great week, and talk to you soon.